Good morning, trading world. It is it's April 27, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. The title for today's outlook: earnings and economic event calendar packed full of landmines. Also, when do crashes actually happen? So this week has been really crazy navigating this calendar. Earnings everywhere, but to me, damage has been done. So no matter what earnings numbers say, we have etched our path. Also, to me, it's not the earnings that are of importance now. It's the forward guidance that will have the biggest impact from companies reporting now. Another thing I wanted to touch on: when do crashes really happen? A lot of people think that crashes, don't really or happen from these places of overbought conditions. But it's not really like that. It's not really like you would think, us coming from a place of overbought to a crash. Crashes usually happen from oversold conditions, when dip buyers finally give up on buying the lows and we get that alternate thesis, which usually gives us that opposite, more explosive move. I am seeing April 29th going forward as that breaking point. Dip buyers are here and about to give that last all-out effort. So we're going to see today and tomorrow whether dip buyers can get a handle on this market and we actually get a real bounce going, or whether the back of the dip buyers' spirit will be broken today and tomorrow and we go lower, much lower. Usually we used to have this thing or this mantra or saying, sell in May, go away. I don't know about the go away part anymore, but we're definitely going to see a good bit of selling the first week of May. So be prepared for that. Now, let's get into the key levels of the day. All right, here we are with the key levels of the day. Starting on the resistance side, we have Jack resistance at 420 to the 421 area, Queen resistance at the 422 to 424 area, and King resistance at the 425 to 428 area. On the support side, we have Jack support at 419 to the 418 area, then Queen support at the 417 to 416 area, and then the King support at 415 all the way down to the 410 area. The thesis for today: the main thesis is bullish, closing above 416.10 with a projected high or target of about 425 to 428. It's going to be a great place to start laying in shorts if we reach that 428 area today. Alternate thesis is bearish, closing below the 416.10 with a projected low or target of 416 to 410. The current channel we are in is 416 to 425, with the minor channel being 414 to 425. The next minor channel above is 425 up to 431. So I do have today as being bullish, and I just want to remind you of the outlook I had for the week. Remember, the weekly bias is bearish, and that bearish outlook says that we'll close below 426.04. So that's where we are. Also, on that weekly, we had a retrace of about 437. I can't remember if we actually went to 437 this week, but I know we were somewhere decent. We did have some highs earlier this week, but it's kind of playing out as far as getting a bounce today and kind of maintaining that tomorrow or close to. Even if we sink lower, we're probably going to get back a good bit of whatever we lose overnight tomorrow. And just kind of looking at the calendar, I kind of have the 29th as that start of the break, but we have the first coming on Sunday, which means Monday and Tuesday, with it being the first, we have new fund flows. So it's quite possible we get this bounce to kind of carry over a little bit into Monday and Tuesday of next week. I'm not saying it's going to skyrocket, but the new fund flows may be enough money for us to kind of hold above the lows of this week going into next week. Or whatever low that we place on Friday, the new fund flows may be enough to kind of cushion us, to keep us in that area or above it going into Monday and Tuesday. So it's very rare that we have down days on that first, second, or third, but it can happen. So if we get a down day on the 2nd and 3rd of May, it's going to be really, really powerful. So I just want to get you prepared for that. And with that being said, let me bring up the scenarios of the day. All right, here we go with the scenarios of the day. The scenarios, the probabilities have been jumbled up as they have been for a while, because the volatility being this high, it's hard to differentiate things. And the first scenario, what I see as the most probable, is going to be our trend day up. We open gap up, symbolized from the blue line as the previous close, and we get a slight fade back toward that previous close, where we find should be support. Give me just a second. Okay, that's better. We find support on or before the previous close, then begin the uptrend for the morning. We find midday chop around either the queen or king resistance area. And today things might get a little crazy around that area, because the second half of the day could be, we could fade a little more than normal the second half of the day. But we'll address that on the next scenario, the rounded reversal. here we are with the rounded reversal day type structure. We could get a continued push higher. It means we come out at the cash open like gangbusters, continuing the up move. And that's usually the differentiation of the rounded reversal day and the trend up day, is that there's no pullback. There's no closing of the gap on the rounded reversal day. We usually continue straight up, heading toward the target right from the cash open. And we'll find our midday chop either around the queen or king resistance area. And then the second half of the day, we're going to use the same force to go back down the same way we came up in the morning. So that's our rounded reversal day type structure. So we'll be looking for that, something like that, either today or tomorrow. All right, here we are with the last scenario, which is our expansive rain day structure. We could look to set a decision area lower boundary around the jack or queen support area before bouncing higher and higher throughout the day, and then a possible visit back to the middle of the range. The key thing about identifying the expansive range day is that we cross that previous close. On all the other days, this is usually going to be either a support or resistance. But on the expansive range day and range day, we usually cross this and close under it or above it, depending on where we start. So this is the expansive range day structure. Again, these next 2 days, especially Friday, are going to be very key in identifying how fast this thing is going to unfold. I'm looking for today and tomorrow to possibly hold us up to some degree, and then Friday's that day where things could unravel pretty fast. So again, remember, crashes don't really happen from overbought conditions. They happen when dip buyers get tired, and it usually always happens in that oversold condition where people are looking for the bounce to happen, and we get that alternate thesis that kind of surprises everybody, and you have a lot of dip buyers that have bought that have to flip out of longs that they have, and in order to close those longs you have to sell, and that just adds to the fire of the selling going to the downside. So everything right now is kind of that perfect storm or perfect condition for a crash to happen right now, because you have dip buyers coming in and they've been trying to get something going, but it's just not taking off the way they like. And at some point, the dip buyers, the retail dip buyers, are going to give up. And then when they finally give up, we're going to have to break outside of the expected move. And what will really push us is that once we break outside of that expected move, and on the SPY this week, it is that 412 area. That's the lower end of the expected move. once we break outside of that expected move area, then money managers have to do something called dynamic hedging. And in a dynamic hedge, they have to continue to hedge positions by selling futures, by selling the S&P futures. And that is what's going to drop us off that cliff. And we have all of this very close to coming together right now. So be very, very careful. As always, please know and understand your risk, and wishing you a positive trading day. Have a great one.